Hi, my name is Sarah and I'm with the ESG division of the MENA Group. Today we'll be discussing the top 12 environmental, social, and governance financial deals in the Middle East, North Africa, Turkey region in the last 2 years. We'll first list the top 12 ESG deals. We will then mention the distinguishing aspects of these deals and how they reflect the huge demand for ESG finance in the MENA and Turkey region. We will then talk briefly about how these deals were selected and compiled, as well as some details about each deal. We will now list the top 12 ESG financial deals in the MENA and Turkey region in the last 2 years, starting off with Egypt with $3 billion, Islamic Development Bank with $2.5 billion, Emirates National Bank of Dubai with $1.75 billion, the Saudi Electricity Company with $1.3 billion, Al Rajhi Bank, the Sudair Solar Project with $925 million, Saudi National Bank with $750 million, Riyadh Bank with $750 million, AP Corp with $750 million, Suwayhan Photovoltaic Power Company with $700 million, Gulf International Bank with $625 million, Kuwait Turk with $350 million, and Akbank in Turkey with $300 million. The 12 top ESG-linked financial deals in the Middle East, North Africa, and Turkey region in the last 2 years have the following distinguishing aspects. The first ESG financial deals in MENA and Turkey have all been very successful and relatively large. This reflects the fact that the region has major need for ESG finance. All these pioneering deals were oversubscribed. This reflects the strong demand for ESG-linked financial instruments in the MENA-Turkey region. The pricing of almost all these deals went down during the subscription period. This again reflects the strong demand for ESG-linked financial instruments by regional and international investors and banks. Some of the deals are clearly balanced deals from an ESG perspective. This is because they included more than one element in ESG. It's important to note the inclusion of the social element of gender diversity in the deals of Emirates National Bank of Dubai, GIB, and Akbank. The social elements will account for 90% of the 2.5 billion sukuk of the Islamic Development Bank. Solar power projects have a significant focus as well. These include the solar power dedicated deals for the Suwayhan photovoltaic plant in the UAE and the Sudair Solar IPP in KSA. Saudi Arabia and the UAE are clearly particularly active in ESG financial transactions. The ESG linkage in 2 Turkey deals was an advantage to overcome uncertainties surrounding Turkish financial paper. It is clear that banks and companies in MENA Turkey need to develop their ESG programs and ESG reporting because this would improve their access to finance and get them better rates on their borrowings. This is evidenced by the high demand for ESG financial instruments in MENA Turkey, as reflected by the oversubscriptions of ESG-linked bonds and loans in the last 2 years, and the reduced pricing of these deals. All the ESG-linked financial deals need to be independently verified for adherence to ESG criteria during their lifetime. This is particularly important as most of these deals have international investors who are subject to strict regulations by their supervisors, such as stock exchanges and banking supervisors. MENA has compiled the top 12 ESG financial deals while conducting its comprehensive survey of ESG reporting in more than 700 banks in 41 countries. All banks in MENA and Turkey were surveyed. Other banks surveyed were in Africa, Central Asia, Latin America, and Southeast Asia. The MENA ESG survey found out that only a third of the banks in the emerging countries have ESG sustainability reports for the year 2020. However, the banks that have ESG reports increased to 42% in 2021. The banks that have ESG reports are also mostly the larger banks in these countries. The survey, moreover, found out that most banks plan to have ESG plans and reports in 5 years' time. For more information on the MDIA ESG survey and MDIA's ESG offerings, please visit MDIA's website and its ESG section, linked in the description box below. I will now go over each of the selected 12 deals very quickly. Egypt was able to secure a $3 billion mixed-use loan in 2021. Part of its proceeds will be used to finance sustainable projects. The loan was expected to be worth $2 billion, but was oversubscribed. The Islamic Development Bank managed to raise $2.5 billion in sustainability sukuk. 10% of the proceeds have been allocated to finance green projects, while 90% are to finance social projects, one of the largest allocations to social projects in ESG deals in the world. The pricing was also reduced by 15% due to an excess in demand. Emirates National Bank of Dubai secured the region's first sustainability-linked syndicated loan of $1.75 billion. The bank linked specific sustainability metrics to the loan, such as gender diversity in top management roles and water conservation. The strong demand generated by the ESG linkage reduced the overall cost by 30 basis points on the 3-year loan and led to nearly 20 banks participating in the loan. The Saudi Electricity Company issued the first green sukuk for KSA in the international market in 2020. This was $1.3 billion sukuk, but they were 4 times oversubscribed, reaching $5.2 billion, with proceeds intended to finance their green projects. Al-Rajhi Bank was the mandated lead arranger and hedge provider for the Sudair Solar IPP project, which is set to offset nearly 2.9 million tons of greenhouse gases every year. The deal value is $925 million. This is reportedly the largest solar independent power plant in the world. The financing group included Riyadh Bank and Al-Rajhi. The equity bridge facilities were provided by Bank al-Bilad, Saudi British Bank, and Sumitomo. Saudi National Bank issued a $750 million ESG-linked bond in early 2022. Demand topped $3.2 billion and resulted in reduction of pricing to 85 basis points from the initial 110. Proceeds will be used for projects under their Sustainable Finance Framework, which focuses on renewable energy generating facilities and forestation. Riyadh Bank issued a $750 million AT1 sustainability sukuk. It was 4.3 times oversubscribed, with demand peaking at $3.2 billion, which resulted in a rate of 4%, the equivalent to the lowest credit score spread by a GCC bank for an AT1 sukuk. The Arab Petroleum Investments Corporation, AP Corp, issued a $750 million green bond, which ended up being 3 times oversubscribed by both regional and global investors. The 5-year issuance will be utilized to fund projects such as renewable energy, green buildings, and pollution prevention and control. The Suwayhan Photovoltaic Power Company issued a $700 million green project bond intended to fund construction, operation, and maintenance of a 1,177 megawatt solar power plant. This is the first green project bond in MENA listed on Euronext Dublin. Gulf International Bank secured a $625 million sustainability-linked syndicated loan, which increased from an original $500 million due to strong demand. 20 global investors from the US, Europe, the Middle East, and Asia participated in the transaction. The loan incorporates ESG metrics related to reduction in carbon emissions, gender diversity, and sustainability reporting. The Turkish subsidiary of Kuwait Finance House, Kuwait Turk, issued a $350 million ESG Tier 2 sukuk issue. Because this was the world's first ESG Tier 2 issue, it was 12.5 times oversubscribed, and the pricing went down by 62.5 basis points in 6 hours. The reduction in pricing and large demand was due mainly to the ESG nature of the facility and the strong Kuwaiti ownership. Akbank, one of Turkey's leading banks, partnered with Deutsche Bank to structure the successful execution of its first ESG-linked repurchase agreement transaction globally. The structure of the transaction links the repo interest rate to Akabank's performance with respect to 3 areas of ESG key performance indicators: gender balance, electricity sourcing of Akabank from renewable resources, and no greenfield coal power plant loan origination. The numbers speak for themselves. Banks are recognizing that it is rewarding and profitable to be active in the ESG space. The track record now clearly shows that investments with high ESG scores have generally better financial returns in the medium and long run than standard investments. If interested in more details about MDIA's ESG practices, please go to mdia.com or leave us your comments and questions under the video. And for any inquiries, don't hesitate to email us at esg@mdia.com. The links will be in the description box below. Thank you for watching.